Imagine waking up one day, checking your bank account, and instead of seeing dollars, euros, yen, or rupees, you see a single cryptocurrency. No matter where you are in the world, Tokyo, New York, Paris, Nairobi, everyone is using the same digital coin. Governments no longer print paper money. There are no exchange rates, no currency conversions. Everything from buying a coffee to paying your taxes is done in a unified, decentralized digital currency. What would happen to the global economy if cryptocurrency replaced all national currencies? Could it work, or would it spiral into chaos? What happens to governments, banks, inflation, and inequality in a world where money is entirely digital and borderless? This is more than just a futuristic fantasy. With the rise of Bitcoin, Ethereum, and other blockchain technologies, the idea of cryptocurrency becoming mainstream is no longer science fiction. In fact, some countries are already experimenting with central bank digital currencies, CBDCs, while others are using crypto for remittances, trade, and even national reserves. But let's take it one step further. Let's imagine a scenario where every fiat currency in the world is replaced by a single global cryptocurrency. No cash, no local currencies, just one universal digital asset that everyone uses. The first and most obvious consequence would be the end of traditional monetary policy. Today, central banks like the US Federal Reserve, the European Central Bank, and the Bank of Japan control their economies by adjusting interest rates and printing money. These tools help manage inflation, unemployment, and economic growth. But in a world of a universal cryptocurrency, especially a decentralized one like Bitcoin, there's no central authority to adjust supply or control rates. Money becomes finite and pre-programmed. This could stabilize inflation in the long term, but it would also mean governments lose a major lever of economic control. During a recession, they couldn't stimulate spending by printing money. In a crisis, they couldn't devalue their currency to boost exports. This raises serious concerns about how nations would manage their economies. If everyone uses the same currency, how can poor countries compete with rich ones? Today, nations can tweak their exchange rates to support local industries or protect their economies. With one crypto, that flexibility disappears. The rich-poor divide might actually deepen, with economically powerful regions gaining even more control. And then there's the question of control and sovereignty. Money is power. By issuing its own currency, a country maintains independence and authority. If a global cryptocurrency replaces national currencies, governments would effectively surrender that control to software, protocols, and potentially to anonymous developers or powerful crypto organizations. Would democratic governments be comfortable giving up this kind of power? Would authoritarian regimes allow it at all? A decentralized currency removes borders, but not all countries are ready to lose sovereignty in the name of digital innovation. But let's look at the upsides. A universal cryptocurrency would revolutionize global trade. Right now, international transactions are expensive, slow, and plagued by intermediaries. Exchange rates, wire fees, conversion delays, all of it would vanish. Businesses could pay partners anywhere instantly, securely, and transparently. This could unleash a new era of global commerce and financial inclusion, especially for people in underbanked regions. Cryptocurrency could also reduce corruption. Since blockchain transactions are transparent and immutable, it becomes harder for officials to launder money, embezzle funds, or manipulate accounts. Governments that embrace the technology might become more accountable to their citizens. Additionally, crypto enables financial freedom. Billions of people around the world lack access to traditional banking, but many have smartphones. With crypto wallets, they could save money, invest, and transact without needing a physical bank. This could lift entire communities out of poverty and provide a new layer of economic security. However, there are major risks. One is volatility. Most cryptocurrencies today fluctuate wildly in value. Imagine your monthly salary dropping 30% in a day, or suddenly rising 50%. Such instability would wreak havoc on budgeting, saving, and investing. While some stablecoins attempt to fix this by pegging their value to fiat currencies, the challenge remains. How do you maintain trust and consistency in a global financial system with no central stabilizer? Another concern is security. Yes, blockchain is secure by design, but wallets can still be hacked, passwords lost, and exchanges compromised. If someone drains your crypto wallet, there's no bank to call, no central authority to reverse the transaction. People could lose their life savings in seconds if security isn't foolproof. Then there's the issue of privacy versus surveillance. Blockchain transactions are transparent, but sometimes too transparent. Governments or corporations could trace every transaction you make. Every purchase, donation, or gift you send could be monitored. Alternatively, some cryptocurrencies offer complete anonymity, which could be exploited by criminals, tax evaders, or terrorist networks. Let's not forget energy consumption. Cryptocurrencies like Bitcoin are notorious for their environmental impact. Mining operations use vast amounts of electricity, often more than entire countries. If the whole world switches to a crypto-based system, we would need more efficient, sustainable technologies or a different consensus mechanism altogether. There's also the impact on banks and financial institutions. In a crypto-dominated world, banks would need to evolve or disappear. Traditional roles like saving, lending, and currency exchange could be replaced by decentralized finance platforms, DeFi. This could increase access and reduce fees, but also open the door to scams, bubbles, and crashes without regulation. Regulation would become a heated topic. Who controls the global cryptocurrency? Is it decentralized and governed by code? Is there an international body overseeing it? How do we handle disputes, fraud, or systemic risk? Without a global framework, chaos could ensue. Culturally, the shift would be enormous. Money is more than just a medium of exchange. It's tied to national identity. Think about how people feel about their currencies: the dollar, the pound, the yen, the peso. Replacing them with a generic digital coin might feel cold, alien, or even dystopian. Traditions like tipping, gifting cash at weddings, or collecting coins would fade into history. Taxation would also be a challenge. Governments today tax income, purchases, capital gains, all based on national currency systems. With crypto, enforcing tax laws becomes trickier. People might hide assets in private wallets or shift funds instantly across borders. Governments would need new tools to track and regulate transactions. On a deeper level, we'd need to redefine what money actually is. Is it a belief system, a social contract, a mathematical formula, a token of trust? Cryptocurrency challenges all these ideas. It turns money into code and code into power. In doing so, it might force us to confront the very foundations of modern society. Now, let's imagine the rollout. Transitioning from hundreds of fiat currencies to one crypto wouldn't happen overnight. It would likely begin with gradual adoption. Countries testing national cryptos, companies paying employees in Bitcoin, cities accepting crypto for taxes. Over time, fiat currencies would lose relevance as crypto ecosystems grow. Eventually, the shift might become irreversible, but the transition would not be smooth. Expect political resistance, market crashes, technical bugs, and public confusion. Elderly populations might struggle to adapt. Scammers would take advantage of gaps in knowledge. The early years could be chaotic before stability emerges. However, younger generations, already comfortable with digital wallets, QR codes, and online banking, might embrace the change. They see crypto not as a threat, but as the natural evolution of money in a digital world. For them, global crypto unification could represent freedom, efficiency, and opportunity. In the end, if all currencies are replaced by a single cryptocurrency, the world would become more connected, but also more vulnerable. We would gain speed, transparency, and efficiency, but possibly lose stability, control, and cultural identity. It could solve some problems while creating entirely new ones. Whether this world becomes utopia or dystopia depends on how we get there. Who controls the crypto? How is it governed? Is it inclusive or exploitative? Secure or fragile? Transparent or invasive? The technology is neutral. How we wield it is not. So, could cryptocurrency replace all the world's currencies? Technically, yes. Politically and socially, it's much more complex. But as blockchain evolves and as trust in fiat systems erodes, the possibility grows closer every day. Maybe the future of money isn't a coin in your pocket or a card in your wallet. Maybe it's a line of code, universally accepted, invisible, and yet powerful enough to reshape the world. Are we ready for that world?